Hey, what's up guys? Welcome back to our channel and I hope you're all doing well. In this video, I'm going to go over my 5 dividend stocks that are my picks for the month from the hundreds of stocks that trade on the TSX. I'm going to go over the key financial figures, their valuation metrics, and my analysis on why they are my picks for the month, so make sure you watch the entire video. I'm also going to provide any recent business updates so you have an idea on where these stocks are headed next. Let's jump right in. First up, Magna International, ticker symbol MG. Recently, Magna dipped 20% in June after rising 116% in the last year from an economic rally. The company was hit by factory shutdowns and a decline in car sales during the height of COVID-19. But with the recent election of Joe Biden, it gave new hope to all players in the green energy and electrical vehicle market. Magna's stock could surge past its recent all-time high of $126 and hit new highs as EV sales gather more and more momentum. I could easily see an upside over 25% based on its current trading price. This is an amazing long-term pickup, especially with the recent dip in stock price. Magna is currently trading at $99.6 per share. It has a market cap close to $30 billion, a PE ratio of 10.84, an earnings per share at 9.11, and a dividend yield of 2.18%. Magna pays out dividends on a quarterly basis during March, June, September, and December of each year. It has a payout ratio of less than 23%, coming in at 22.96%, and its most recent dividend was $43 per share, which represents a 3-year dividend growth of 8.85% and a 5-year dividend growth of 11.55%. If you're looking for a great dividend growth stock, look no further than Magna. Looking at Magna's recent financial performance, Magna has seen some incredible performance on a year-over-year basis. All of its key metrics have shown significant growth. Revenue, net income, earnings per share have seen triple-digit growth. This is a growing company, and with the growth of the EV market, Magna is poised to grow even further. More cars require more and more electric components, and Magna is a significant player in this field. It has a return on equity at 20.08%. The stock is up 49.3% in just the last year. In the last 5 years, the stock has gone up 90.37%. In terms of Magna's analyst recommendations, because of MG's strong performance and the fact that the stock is trading around $100 a share, this stock is now considered to be a strong buy. It has blown past all price targets set. The high price target was $85 and it has smashed through that. And the best part, there is still significant upside yet to come. Magna's deepened focus on enhancing its portfolio of e-powertrain technology offers ample room for growth. The recent joint venture with LG Electronics will only help Magna further expand its electronic powertrain options, and Magna's new e-beam technology will only help the transition to all-electric pickup trucks. It has significant investments in Waymo and Fisker, which are known for self-driving technology. Magna is well positioned for the EV market, self-driving technology. Not to mention, it's one of the largest automotive parts suppliers in the world. It's set for both short-term growth and long-term growth, and that's why it's my pick for the month of September. By the way, if you're new to the channel or you've seen my content before, make sure you hit that like and subscribe button if you haven't already done so. This lets me know to produce more content like this, and you don't miss out on future stock picks. Next stock up, Brookfield Infrastructure Partners, ticker symbol BIPC. BIPC is one of the world's largest infrastructure investors, owning and operating assets across utilities, transportation, midstream, and data sectors. They have over 120 years of investment experience and an unparalleled ability to scale high-quality businesses. The investments they make deliver on essential goods and services, from the movement of passengers and freight over roads and rail. And recently, they have made an investment in India's digital connectivity market, with more than 135,000 communication towers, backing one of the largest telecom companies in India. It's currently trading at $79.23. It has a market cap over $3.5 billion, a dividend yield of 3.19%, and its last quarterly FFO was 85 cents per unit, which gives it a return on invested capital at 12%. In terms of dividends, they pay on a quarterly basis in March, June, September, and December of each year. The payout ratio based on FFO for the 6 months ended June 30th was 74%, and its most recent dividend was 51 cents USD per share, and their distributions have grown at a 10% CAGR over the last 10 years. Looking at the key performance metrics for BIPC, net income, EBITDA, and FFO are all up for 3 and 6 months ended June 30th. Brookfield is able to generate stable cash flows with 95% of adjusted EBITDA supported by regulated or long-term contracts. Its stock in the last 1 year is up 17.6%. In the last 5 years, it's up 58.18%. BIPC is well positioned to deliver FFO growth between 6 to 9% going forward. If you're a dividend growth investor, this is great news because this translates to continued growth in dividends as they have done so in the past. And as of August 30th, BIPC has successfully taken up 68.7% of Inter Pipeline's common shares. With the remaining shares, Brookfield intends to pursue a privatization transaction. The details of this transaction will be announced by both Brookfield and Inter Pipeline at a later date. And because of this takeover by Brookfield, Inter Pipeline's monthly dividend has been suspended starting in September. Brookfield Infrastructure is a flagship company that will look for opportunities to grow its portfolio on a both organic and acquisition basis. And based on the continued growth ahead, this is my pick for the month of September. The next stock I want to talk about is Alaris Equity Partners Income Trust, ticker symbol AD.UN. The objective for Alaris, if you've never heard the name before, is to provide unitholders with growing, stable, and predictable quarterly cash flows that are also tax efficient. In a nutshell, Alaris' long-term objective is to create the optimal income stream available to investors. They do this by providing capital to private enterprises by using an innovative structure in the private equity market. So if you want to reap the benefits of investing in private businesses through a publicly traded entity, Alaris should no doubt find a place in your portfolio. AD is currently trading at a market price of $18.63, with a market cap close to $850 million, a PE ratio of 6.69, and earnings per share at 2.79, with a very healthy dividend yield of 6.66%. ATD pays out dividends on a quarterly basis in January, April, July, and October of each year. They have a payout ratio of 68%, and the most recent dividend was 31 cents per share. In March of 2020, Alaris made the decision to change the dividend policy from a monthly basis to a quarterly basis. And since inception, they have paid out over 150 month/quarterly dividends. Taking a look at Alaris' performance, it has seen consistent growth in the 6 months ended June 30, 2021, compared to the same period last year. 24% increase in revenue, 58% increase in EBITDA, 17% increase in operating activities, and a 29% increase in dividends paid. So you can see why investors have been flocking to this income trust. What's not to like? You have growing revenue stream, growing distributions, a very healthy yield. This is exactly why investors love the structure of Alaris. It has a return on equity at 18.01%, and in the last 1 year alone, the stock has gone up 52%. Not only are you getting great dividends, but you're also getting capital appreciation along the way. In terms of AD's analyst recommendations, AD is rated as a buy, and it's no wonder why, because of their unique structure that allows them to invest in private businesses, returns that you just can't get from the public market. And with a high price target of 23.5, you can see it has plenty of upside based on its current share price. Approximately 86% of Alaris' investments are in the US, which is great from a diversification point of view. This means while you're sitting in Canada, you can reap the benefits of investing in US private enterprises while sitting at home through this income trust. And the remainder of their investments are based in Canada, so you get the benefit of US private enterprises and Canadian private enterprises, all through one single holding. To me, there is no doubt that Alaris has a unique business model, which is different than traditional private equity. And this very same model allows them to scale their business, which means that more of the growth can be passed on to investors like you and I. And with their mandate to grow their portfolio and increase their dividends, you can see why this is my pick for the month of September. Next stock up, Power Corporation of Canada, ticker symbol POW. Although the name can be misleading if you've never heard the name before, you might think it's a power or an energy company, but it's not. Power Corp is a short for a holding company which has multiple businesses under that umbrella. And some notable names under that umbrella include Great-West Life, Mackenzie Investments, WealthSimple, IGM Financial, just to name a few. The best way I like to think about Power Corp is that of an alternative asset manager building on its portfolio of investments. And as part of Power Corp's fintech strategy, they're also supporting a name you've heard on this channel before, WealthSimple, which is one of Canada's leading financial technology companies. By investing in Power Corp, you get the benefit of owning and operating one of the country's largest and fastest growing digital investing services. Power Corp is currently trading at $43.02 with a market cap close to $29 billion, a PE ratio of 10.89, earnings per share at 3.95, and a dividend yield of 4.16%. They pay out dividends on a quarterly basis in February, April, July, and November. They have a very healthy payout ratio of 45.2%. The most recent dividend was 44.8 cents per share. They have a 3-year dividend growth rate of 10.21% and a 5-year dividend growth of 9.15%. Looking at the financial performance for Power Corp, everything besides revenue has gone up on a year-over-year basis. In fact, Power Corp has committed to disciplined cost management, announcing its intention to reduce the expenses at the holding company by $50 million per year within the next 2 years. The company is serious about making sure investors get the maximum returns possible from its portfolio of businesses. Owning shares in Power Corp is like owning a mini Canadian Berkshire Hathaway. Power Corp has a return on equity at 11.02%, and in the last 1 year alone, the stock has gone up 63%. And over the 5 years, the stock has seen 56% appreciation. Look at the analyst recommendations. Power Corp currently has a mix between a buy and a hold. But when I look at the growth prospects of just WealthSimple alone, and the fact that the current price is trading below its average price target, there is still plenty of upside on the table, especially now that Power Corp is focused on emphasizing its investments in fintech. Not only do they want to create value for their shareholders, but also for their clients. They have a client-first approach. During the height of COVID-19, they implemented numerous payment deferral programs and special loan programs, making sure that their clients are taken care of when they need it the most. The company's key focus is value creation, making sure there's organic growth in each of its operating businesses, making sure capital is deployed and redeployed where it makes the most sense. Earlier in the year, they acquired Personal Capital out of the US, and Mutual Life Insurance Company was acquired before that. These transactions, plus the growth of WealthSimple, can greatly enhance Power Corp's offering, leading to a higher stock price, meaning more value for its shareholders. And that's why this is my pick for the month of September. Last up, Aecon Group, ticker symbol ARE. If you're looking to add a high-growth dividend stock to your portfolio, take a deep look at the Aecon Group. Not only is it a billion-dollar company, but has a ton of expertise in multiple areas, including utilities, infrastructure, and the industrial sector. Aecon is in a great sector, especially at a time when Canada is looking to kickstart its economic recovery. One of the best ways countries can inject growth while at the same time improving the lives of their citizens is by making major investments in infrastructure and construction. Aecon is well positioned to grow its business and operations rapidly in the coming years. In fact, they have a backlog of over $6.5 billion worth of projects in the pipeline. The stock is currently trading at $20.82 per share. They have a market cap over $1.25 billion, a PE ratio of 13.73, earnings per share at 1.52, and a dividend yield of 3.36%. This is a great long-term pickup, especially if you're looking to buy stocks that are trading at less than $25 a share. The dividends are paid quarterly in January, April, July, and October of each year. The payout ratio is very healthy at 42.68%. The most recent dividend was 17.5 cents per share. It has a 3-year dividend growth rate of 9.41% and a 5-year dividend growth at 8.07%. Taking a look at Aecon's performance, it has shown tremendous growth in 2021. Revenue, profit, EBITDA have seen strong growth on a year-over-year basis. There has been a record level of infrastructure investments made by the government as part of the COVID-19 recovery, and the result of those investments are giving a major boost to companies like Aecon. As an investor, investing into a company like Aecon, you also can take advantage of this economic recovery from COVID-19. Aecon currently has a return on equity at 12.6%. In the last 1 year alone, the stock has gone up 40.3%. In the last 5 years, it has gone up 13.5%. Taking a look at Aecon's analyst recommendations, you're not going to see many stocks with a buy or strong buy rating across the board. This is what makes companies like Aecon such a compelling story. Every analyst is recommending this as a buy. It's seeing growth in all key areas. This stock is a no-brainer pick. If you want to take advantage of the investments being made into construction, into infrastructure, Aecon needs to be in your portfolio. And the best part, there is still so much more upside yet to come. During the Q2 2021 results, revenue for the 3 months ended June 30th was up 25% compared to the same period last year. At the same time, they were also awarded an additional $1.6 billion of projects due to the sheer demand of Aecon's services. Based on the company's recent success and financial performance, TD Securities has given this a buy rating, while National Bank, on the other hand, has given this an outperform rating. This stock is up more than 25% on a year-to-date basis, and according to analysts, it has a potential upside of 17.5% coming in the next 12 months. Aecon pays a growing dividend with a very healthy yield and terrific business prospects. This is why it's my last pick for the month of September. Thank you so much for watching. This channel would not exist without your love and your support. If you've enjoyed this video or any one of my other videos, consider hitting that super thanks button on the bottom of this video. It's a new way to directly support your favorite content creators on YouTube. Or if you'd like, you can buy me a virtual coffee as another way to support my content and the channel. All proceeds will be used to bring you even more value-added content that I hope will leave a lasting impact on your investing journey. So if that sounds good to you, check out the link in the description of this video to buy me that virtual coffee. And on that very same page, you can download my custom-built Excel-based dividend portfolio tracking spreadsheet, which I use to track my own dividends, forecast my dividend income, and track my gains. So you can keep track of your portfolio exactly the same way I do. If you have questions for me, feedback on this video, or maybe you have ideas on future content, let me know your thoughts in the comment section. And while you're at it, make sure you've hit that like and subscribe button or that thanks button. That's it for now. I'll talk to you in the comment section.